The following is a presentation of TFNN. Live at TFNN, The Money Masters. Now, your Money Masters, Tom O'Brien and Steve Rhodes.
Welcome, folks. Steve Rhodes, Tom O'Brien. Appreciate all you tigers and tigresses growling and prowling out here with us. We have the Dow Industrials down 223 right now. Nasdaq's off 43. S&P's off 23. We have a great treat for you out here today, folks. You know, we talk about Harmony Gold. We talk about the Rand. Well, today, Harmony come out with some numbers. We got the CEO, Graham Briggs. Graham, congratulations on these numbers. I can tell you, you know, in the mining business, there's not many folks that have had a five-fold increase here. Talk to us.
Great stuff, Tom. It's good to hear you. Yeah, a good quarter.
Yeah, you know, it's amazing, you know. And, you know, first off, I want to thank you for all the support. But, you know, over the years, I remember just even in 2001, and I've been kind of explaining to folks on a continual basis that how dynamic it is, you know, when the Rand gets weaker and the dollar gets stronger, that gold can actually go lower. And the position that you have is that basically is a decent position, right?
Absolutely, Tom. Yeah, during the last quarter, from quarter to quarter, the gold price really went up only 3% in dollar terms, but because of the Rand weakening slightly, 5% in Rand terms, and that also helped our profitability.
So can we walk, you know, there's a lot of new listeners out here, Graham. So, you know, I'm looking right now, and folks, if you're watching the TV portion of this, okay, what you're looking at is that we have the Sustainability Development Report up for 2012. Can you walk the folks through, you know, what the goals are of Harmony, you know, for 2012, 2013, Graham?
Yeah, sure, Tom. What we have is a fairly simple strategy, and we focus on three main issues. We're talking about growth, and really growth in its many forms, including profitability. We are talking about getting the best out of our current assets, and then we're talking about exploration. Our main exploration focuses are in Papua New Guinea. So in South Africa, we've done a lot of restructuring of our operations, really getting those operations and spending some capital on those operations that have got the potential of long lives. We've been closing the shorter operations, the guys that sort of got a weaker grade, and you know, the ore body is basically tired and worn out.
Yes.
And so that's what we've been focusing of late, and the money that we've been spending on these new capital projects is now starting to bear fruits, and we are starting to increase our production. So during the next few years, we've got a production profile which basically goes up from, you know, currently this year we're looking at 1.3 million ounces, and then goes up to 1.7 million ounces in 2016. So we are really focusing on that. Most of our operations here in South Africa, and we've got a small amount of gold coming out of Papua New Guinea, but we've got a big copper gold project in Papua New Guinea which will be going into feasibility study now. So a fair amount of, I guess, irons in the fire, Tom.
You know, when we look at, of course, you know, what it ended, you know, happening. Of course, we knew you had the unions, the miners. Can you talk a little bit about what the environment is in South Africa right now?
Tom, yes, it's been a fairly difficult time for the miners in general. There were some issues that started on the platinum mines and then spilled over to a lot of the mining industry. As a company, what we did, you know, we have a lot of people working for us. We have 40,000 people working for us. We upped a lot of our communication. We got to grips with what was happening in the industry. And relatively speaking, we didn't have any issues during the quarter that we're reporting on. Subsequent to that, we've had one of our mines that's been on strike. It's back in operation now. So we've been relatively sheltered from any of those issues, but I think that's thanks to our guys really getting close to our operations, getting close to our people, and managing all those issues. So we've been relatively sheltered from the issues that have been affecting the rest of the industry.
And as you said, when you have 40,000 employees, no matter what community you're working in, it's kind of neat. When I'm looking at actually when I saw it happening, I said, well, this is going to get interesting because the rand is getting weaker. And what that does, whether folks, like it or not like it, I'm not sure, in South Africa. But what it absolutely does, right, is puts more money to your bottom line. So then, as you spread that through the communities, that basically can satisfy a lot of different tastes, can it?
Yeah, it's certainly that, Tom. So, we have also a pay structure which is somewhat different to a lot of the other companies. Even at our lowest levels, we have things like profit share. So we've got a higher proportion of our salaries in variable costs, and therefore, getting improved safety, getting the production through is benefiting the employees better. They share in the profits. Obviously, if we're profitable, then we can manage to put more money into the community in our various community efforts. And we've certainly been spending a lot on rehabilitation during the last couple of years because we have been closing those older operations that I was talking about. So, generally, I think, I guess the general impression that I have is that Harmony is a good place to work at the moment. Yeah,
big time. And, okay, so let's talk a little bit about how you got the net income up fivefold and, from quarter to quarter.
Yes, Tom. It's really a few things. One was really getting the production and the production in tonnage as well as in grade. So that was the main area of focus. So more kilograms or more ounces coming out of the ground.
Okay.
So quarter on quarter, we went from production ounces of just under 300,000 to nearly 322,000 ounces. So that's 8% improvement. Then we were talking about the gold price. For us in rand terms, it went up 5% in rand terms. So that gave us a much better profit. Operating profit was about 1.4 million rand, or up sort of 9% on the previous quarter, and ultimately led to headline earnings per share going up by the amount that you're talking about. So a lot of things in our favor, but based really on good production figures and good control of costs and so on. So that was really the main effect. But also, I mean, the gold price, of course, is
Sure.
doing its bit, and these are fantastic gold prices. I mean, everyone looks at it when it goes down a few dollars, but in general trends, the gold price, I'm a very big bull on the gold price.
No doubt. And folks, when Graham talks about 322,000 ounces, remember, that's in 90 days. That's a quarter. What happens in the United States, Graham, is that, there's many gold companies that have 40, 50, or 100,000 a year. Do you know what I mean? So that's a quarter,
yeah.
Folks. Okay.
Yeah. No, it's a substantial amount of production. That's right, Tom.
Yes. Now, can you talk about, you have that monster in Papua New Guinea. Talk to us about that.
Yeah, it's a big guy. It's a copper gold porphyry. It's in a joint venture with a company called Newcrest, which is a Australian company. We're 50-50 joint venture operators. It's gone through a pre-feasibility study. So we've got a lot of figures in both our annual reports and quarterly reports. You can see those figures. It's one of those assets that's now, 1 billion tons resource, and we've declared 450 million tons in reserve. It's also got a reasonable grade when it comes to gold grade. It's about 0.86 in reserve grade, and percentage copper, 1.2% copper. So a lot of gold and a lot of copper in this asset. Obviously a lot of work to be done to get it into production, but it's one of those mines that will probably have a mine life in excess of 30 years. So it's going to be a big guy when it produces.
Amazing. Now, can we talk a little bit about, you had a dynamite quarter here. Going the next few quarters, do you see yourself, Harmony, getting as much ore out of the ground in the next few quarters?
Tom, the strike that we've had, it's taken a while to get us back into production. So for that particular mine, we think that we may lose as much as 25,000 ounces for the quarter. I'm optimistic that during the next forthcoming quarters, both it and other operations will be able to make some of that loss up. So I'm certainly hopeful that we're going to get closer to the 1.3 million ounces that we were initially guiding towards at the beginning of the year. Our year ends in June, so end of June is our year end. And so I'm fairly optimistic. So this quarter that we're in somewhat very similar to the quarter we've just had. And, of course, if the gold price currently does what it's doing, it's going to be another great quarter.
Now, let's talk about the Rand a little. The Rand, folks, when we take a look at the Rand, okay, the Rand in the last 10 years, there was two separate spikes that got up around 10. It's interesting on this move here. It looks like the Rand wants to hang out at like 860 to 960. What's the feeling over there?
Yeah, it's quite difficult to predict, Tom, in what the Rand's going to do, but, everyone's generally trending it that it's going to weaken.
Yes.
When we did our sort of results and looked at the way forward, and that was in August, we were predicting a Rand of somewhere around 750, and now, as you rightly point out, it's closer to 860.
Okay.
So, it's weakened quite a bit since then. Now, that means that in Rand terms, the gold price has gone from probably somewhere around 370,000 Rand a kilogram. It's now closer to 470,000 Rand. So that obviously leads to a considerable margin. We've been able to, pay for all our capital. We've been able to pay for all our exploration efforts, and we're doing a lot. We've paid these bonuses that we've been talking about to the staff.
Yes.
And we've done that out of cash flow. We've also managed to put cash in the bank, so we've moved from a net debt position into a net cash position. So we're pretty good financially, well off, and that's, of course, the effects that the Rand has given to us. Last year, we upped our dividend. In fact, the dividend payments, I think, of something like $26 million actually came out of the last quarter's financials. So,
yes,
despite even paying that dividend, we still managed to put cash in the bank.
Amazing. Listen, folks, it's Harmony Gold. Come over to our website at tfnn.com. We happen to own Harmony right now, too, folks. And, we got it right. We got right at the bottom, too. It's a beautiful thing. Listen, Graham, we really appreciate you out here giving us a great update. Great job. I mean, I'll tell you, the perception in the United States is that everyone was having such a hard time over there. When you can come in with a 5-fold increase, absolutely unbelievable. You have a great one, a safe one, Graham.
Thank you very much, Tom. Thanks for having me.
Thanks so much. This is Graham Briggs, Steve Rhodes, Tom O'Brien. You stay right there, folks. We're going to be coming right back. We have the Dow down 235, NASDAQ off 26, S&P's off 55. NASDAQ off 55. We're going to be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Zavento, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. Steve Rhodes, Tom O'Brien. Appreciate you growling and prowling with us out here. And, folks, you know, if you missed that interview with the Graham Briggs, we'll have that up on a separate clip for you later on this afternoon. What I want to walk you through here, just so you can understand what the difference is, though. Now, watch this. I knew this was insane, the amount of money that they bring to the bottom line, right?
Yeah, because of the currency piece.
Because of the currency. But watch how this works. It's bigger than I realized. So when he was talking there, he was talking about $370,000 per kilogram.
Yes.
And now they get $470,000 per kilogram. And folks, the rand only moved 2 points. So at a 2-point move, you're talking about a 28% bottom line.
Yeah. Well, that helps in increasing fivefold your earnings.
Oh, my God.
Plus getting more gold out of the ground.
Well, he can't speculate on the rand, but I can.
That's right, yeah.
and the bottom line is that when you take a look at this rand dollar, folks, is going to be hanging out at 9.5. That's the way this whole thing is set up. Okay, so now let's go through the markets.
Let's do it.
Let's go through the markets. Okay, so Dow's down 245, Nasdaq 57, S&P's 28. Well, let's start with the S&P. So if you take a look at the SPY, this is what you have happening, folks. You SPY, you're going into the B point. Well, it's going to need 146 million. You got 50 million right now. So if you close under the 140.39, we're at 140.33. Yeah, it's going to be an ABC structure on the way down. My take is that that's not going to happen right now. The reason being, folks, is that when you come down this hard on an open, you lose the energy. And the market just deviant enough right now to basically still do the bounce. And that's where this is set up. See, because the last time that we had any volume on the way down was at the open, the first 10-minute bar. All the market has to do at this particular point is basically, well, all the SPY has to do is get inside 140.82, which is 40 cents. That's the S&P. We go to the NASDAQ. We'll start with the NDX 100. You take a look at the NDX, the three Qs, you're down $1.17. And what I'd like to see at the three Qs is this. The swing point is 64.65. We're at 64.56. But where I'd like to see the three Qs close would be inside the November 2nd area, which is 65.11. Because, see, that's what I think they're...
quite a rejection price.
Well, that's what I think they're really trying to do.
Yeah.
You know, and where I'm going with this whole thing, the reason I'm going with the bounce is this, folks, is that the bonds are up 2 full points, but they don't have enough juice. Yes. They don't have enough volume. And the dollar doesn't either. Does not either. You know, you're up 235 ticks, which is a beauty. Now, both of them want to go higher. But guess what? Just not yet.
Well, and as we were talking, if you just take a look at just simply the intraday chart on the euro, it's just simply moved sideways since 7:30.
Right.
So it had a lot of energy initially, right. And now all it's doing is just simply moving sideways.
Right.
It's over now. It's oversold, so you know it needs to move sideways to work that up. I was taking a look at the New York Stock Exchange. So on the NYA. What it's also doing, so today's going to be a telling day, it's been traveling in this little sideways consolidation area for quite some time. And the bottom of that happens to be the top of Mario Draghi Day, September 6th.
Yeah.
So it would be also nice, since and the high of that is 81.60.56. It has gotten down just below that, got down to 81.58. So I'd like to see it close above 81.60.56 today.
Yeah. And, you know, no doubt. No doubt. Now, and watch this, folks. This is where this gets wild. The Dow is down 244. Now, just as when we're going up, you know, we talk a lot about the top line number, the Dow.
Yes, right.
See,
right.
when you put this together, folks, okay, when you look at it, the Dow's, oh my God, the Dow's at 243. It doesn't mean a thing.
Right.
See, when you put that, when I put that last piece of the puzzle together, to me, it's like, oh, this is perfect. And so all I'm doing here, folks, and you've heard me this before, when the Dow's up 243 and everything else moving, saying I'm selling the market, okay? Well, guess what? This is a buy for a bed bug trade. And what that means, folks, is that, yeah, it's still a short-term deal, but let me tell you something. You know, well, here, let's go see.
Well, you wouldn't want to be selling it here anyways, even if that's your frame of mind.
No,
you've got to wait for a bounce.
It's not even close.
So,
yeah,
you just...
Yeah. You know what, folks? We've only done 178 million shares on the way down. That's not even close. Nasdaq's done some juice, 450.
Well, and it's really Apple. Apple right now, well, it's not just Apple, but you've got Apple going against the island reversal swing point from July 25th out there.
Okay.
31 million shares. You're trading just below it right now. That low was 570. You're 567.50 or so. Volume today, 7 million shares. So we'll see. You know, this could be a nice rejection as well.
Volatility rules, baby. Steve Rhodes, Tom O'Brien. You stay right there, folks. We appreciate all you tigers and tigresses growling and prowling with us. We have Peabody Energy down $2. Yahoo is up down 16. J.P. Morgan Chase off $1.86. We're gonna be right back, folks.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Yeah.
But I knew it was real.
Yeah.
And they could.
I know.
Welcome back, folks. Steve Rhodes, Tom O'Brien. Appreciate all you tigers and tigresses growling and prowling out here with us. Right now, we get the Dow down 221, NASDAQ off 53, S&Ps are off 24. Rheingold Resources, we're talking about another gold company. That's getting banged around this morning. That's down $11. And what you have here with Rheingold, folks, okay, this is something you want to keep your head wrapped around, and this is why. The Rheingold, it's not coming down with a huge amount of volume. You get 600,000.
Maybe it tapers off. It'll be okay.
Yeah, by the time it gets down to where it wants to go. Now, what you have is that, see, when this broke topside again, and this is the bummer, inside the two strongest golds, you know, you had
AEM?
No, RGLD, Royal Gold,
Okay.
Royal Gold, and let's see, both of them are Rheingold. You had them go topside. They had the juice, and then bang, they lost it. And what that means, folks, is this: then they got to a much higher high, had no volume, and it's always a problem. It's particularly a problem after a nice run, and that's what happened. So now
they've had a nice run.
Oh, huge, man.
You know,
huge.
$70 up to $120, $130.
Right.
Yeah.
And so now what you want to keep your head around is this, is that the correlation is this is also going to be a false break of the $120 again. And that when you get a false break, folks, it's a big problem, you know, because much larger correction comes into play, all of the above. So now with Rheingold, you just sit there and you wait to see how it comes into the 105 area. You know, and I suspect, if it comes in with too much volume, and just sit there and wait, and the thing will set up, because the top of this consolidation, the high is 127, but I suspect the real top of the consolidation is 121. Mm-hmm. So if you can get into this at the right price, and it's not right now, let me tell you, it's not right now, folks, because all of these are still in a large ABC down. It's a complex ABC down, and it's going to be dangerous, let me tell you. And I love deviance, man. I absolutely do. And so the gold contract, okay? So the gold contract today, folks, it gets up to $17.33, up $20. Now it's flat. It's not going to have the juice. It's a complex ABC down. You're going to close inside the B point, which is $17.17. And these are the ones that can really slice and dice you. There's because you think the bulls will think that, they missed it, and they jump in, it's too late to jump in, and, they get whacked again.
No. And look, it's a, if you take a look at yesterday's action, so, what I was showing early this morning is, look, gold had gotten to an oversold condition, hadn't been that oversold since, I think, back in April or May.
Okay.
So it had to work its way up. It's either going to go sideways or it's going to start moving up.
Right.
It starts moving up, you start getting a short covering rally going. That's put some juice in it as well.
No doubt.
And, it sets up with my thinking that we're going to see at least one more leg down in gold, which will be nice. It'll be a nice buy for everybody. People won't want to buy it.
Right.
It will be a nice buy, and it sets up for the better longer-term trade.
It does.
And that's the real nice thing.
It sets up for the 2200.
Yeah.
That's the what you're seeing is that we've been in a year and a half of the consolidation, and the large consolidations in the last 12 years have been about a year and a half to a year and 3/4.
Yeah.
So it's probably setting up for next May, folks. That's how this kind of shakes out, which will be here before we know it.
Yeah.
Well, I'm saying turkey.
Well, now that we're through the election cycle, we're smooth sailing to the end of the year.
Well, bottom line is that we'll see what kind of drug ads they put on now. So all the political ads are off. So now
you're right. That's right. That's what was missing. Was all the Cialis and Viagra.
I'll tell you, folks, don't pay attention to any of these ads. Do you know what's sad? What has happened in the medical the drug pharmaceutical establishment? If you see what's going on, bit by bit, they're telling people on a continual basis, you are going to have this, and you are going to have that. You better start taking this drug right now.
That's right, yeah.
Folks, let me tell you something. Get off them and don't take them. I mean, because if you pay attention to it, okay, it's going to kill you. That's the bottom line.
Yeah.
It's disgusting.
Yeah, just drink green juice.
Yeah. Tell them, just be healthy. This deal about, it just drives me crazy, man. And I remember when it first started.
Yeah.
And I knew, even when it first started, saying to myself, they're planting ideas in people's heads, okay?
Oh, no,
continual basis,
for sure, yeah. Marketing, merchandising, I mean, that's what they're doing.
Legally. Legally. Think about that. Legally. How does that work? Let's go take a look at the banks, okay? So we got J.P. Morgan Chase. We might as well start there. Yeah, see, this is doing nothing. They're all doing nothing at the same time. I mean, they are pulling back at that. J.P. Morgan's back the $1.66. You get 13 million shares. We'll see if it can do 47 million. That's what it's going to have to do some damage to the stock. The price is $39.59, meaning, that's just the normal break topside at $39.59 to keep the consolidation on.
Yeah. What's Bank of America doing?
BAC, good old BAC. BAC. She's down 48 cents. Same deal. She's 101 million shares. She's going to have to bang in 330 million. They can do it. There's no doubt about that. It's only at 10:40 a.m. So they can do those numbers. We'll see if they do those numbers, or you see that you're going to get a change intraday here.
Yeah, and if we take a look just simply at the XLF, it's been traveling sideways as well ever since Mario Draghi Day. So a lot of patterns that are out there since September 6th. So if you actually got some pretty nice volume, like you're talking about trying to break through it. The volume on September 13th, that was real.
Oh, big time. And well, what's giving me a heads up too is that this small cap, that IWM. What's going on here, folks, is this is where the deviance is that, you know what, it just wants one more bounce, and what will happen, now this is where it discourages all the bulls. See, so the bulls should be buying it, and they won't be buying it, okay?
Yes.
Because they'll be saying, oh, the market's going to go south now.
Yes.
It's hilarious how it works. So what will end up happening is that as it gets a rejection, as it gets higher, then they'll buy it, and guess what? And
it's the wrong time, because you can see where it's headed to.
Right. And the IWM, we're looking at it, we're at 80. Guess what? It can go to 84 to 86.
Yeah.
And that's the sell. You know, it's. Let me tell you, the IWM is screaming out here today, and it has to do with that high volume bar.
Yes.
This way you're
from September 13th. Yeah.
Well, even November 1st. See, I'm looking at that November 1st.
Ah, okay.
And that November 1st is a. It didn't have much movement, but that's like, okay, what is that all about?
Right.
You know?
Well, look, and it's. I happen to be long the IWM, so.
Oh, good. Hey, that's a beautiful thing, man. Well, listen, I think isn't the IWM the only one that's held the bottoms thus far? I think
it has, yeah. It's doing fine.
So the bottom is
I don't have. I got the spies up here.
84. Yeah, this is the only one that's held it so far. 80.43, and the old low today was 80.48. You know, so they held it. Where the other two, the Qs didn't hold it. You'll see what I can get inside it. Right now, the low on the Q, 64.65. At 149, we're at 64.63. We go to the SPY. We take a look at the SPY. SPY got to a price at 140.29. The low there is 140.39. And we're over it. We're over it. Where's my Hans? You gotta love it. I'll tell you, folks. You know, once these numbers start hitting, which they're hitting, this is a trader's market now, folks, and it's going to be a trader's market for about a year and a half, okay? This is just how this thing goes.
Yeah.
It's pretty wild.
Well, and it is. I mean, look, there's been basically, as we were talking about, no change.
Right.
So, other than a lot of money spent.
Right. Oh, you mean on the
political side?
Oh, yeah.
We've got,
$6 billion and status quo is on.
Yes.
Right. No doubt. They're all crooks anyway.
Wild.
They're just going to take all our money. Doesn't matter. I could kill us.
So, real estate-wise, you're out buying some, and you're going to be up in San Jose next Wednesday?
That's correct. I'm doing I'm doing a real estate presentation, folks, next Thursday. So, November 15th, if you'd like to come to it. That's going to be at the San Jose Hilton. And then in Denver, Colorado, I'm going to be there doing a lunch presentation at the Marriott Tech Center on the 17th.
Okay.
That's on a Saturday. You can come over to our website at TFNN. And what you want to do, folks, whether you want to be in the real estate business or understand it, read the white paper. Please read it, because you're going to get a lot more. If you want to open any business or really understand supply and demand, because all is, I think everyone knows all about supply and demand anyway. But what you'll see there is that the type of research that I did inside the real estate business, you could do for any type of business you want. And all that information is public. Yeah. So it's out there. And when you combine, what I was combining demographics. I was combining the most important one that you'll see out there, particularly, probably wherever you are, is tax receipts.
Yes.
Sales tax receipts, number of people coming in. Say in Pinellas County, folks, we have an average of 4 million people here. 4 million, okay? Largest, it's the most dense county in Florida. Huge amount of money that comes in, comes out, with a real economy. We don't have, it's down there, just personally, but that is not the type of economy that we have here. We have a real economy, real jobs, year-round deal. So, different ball game. But if you'd like to go to any of those...
and that's where I think, the white paper's one thing, and it's good. Right. But if they're in the general area, San Francisco, for example, that actually attending the workshop that you're doing, because you're actually seeing live.
Oh, you'll see the properties.
Really, yeah, exactly what's going on. So you want to talk about an education and really understanding that everything is visual. So reading the report is good, but I think if for those folks that are in the listening area that have the opportunity and they're qualified investors, they really should spend a few hours.
No doubt.
You'll really see what's happening.
No doubt.
Yeah.
And you can email us, folks, at tigerfund@tfnn.com. Let's go over to that DAX, okay? I know we were talking about the DAX, and the DAX, folks, got right up to the highs and gave it up. So we did, this is going to be interesting, too, to see, okay, I don't get the volume till a little bit later to see what we did up at that level. See what, let's see, did it get to 74, 78?
Yeah, it got inside there.
Yeah, it didn't get up to it, though. Interesting. Okay, so to see the high.
Oh, it didn't get up to the high.
No,
got up to the low.
Yeah.
That's right. Got up to get into the low of that.
Oh,
bar.
it
That's
did.
right.
Yeah,
Low of that bar.
Right.
Yeah. And in the DAX is actually it's the strongest index out there.
No, it is. It is.
Which is so crazy because for such a long period of time we were always talking about being the weakest.
Exactly.
It has flipped from being weak to strong out there.
It did.
And so it was the first one up to its highs.
And one of the keys today, but I don't get it till 3 hours after they close, as to what type of volume do we do up there today? Because if it's light volume, it's saying, hey, that'll go down to the bottom. If it's heavier volume, it's like, okay, you could have a rejection and be right back up there. The FTSE and the UK, that's going to be the same deal. When we get that volume characteristic on that, it's going to be, okay, what did you do? And how did you do it? No doubt about that. Inside the Dow Industrials, folks, it's all red. There's not one Dow stock that's green. You get the ones that are dragging it down the most are Bank of America, J.P. Morgan Chase, United Health, and Hewitt Packard. Oh, what's HBQ doing? That stock is like toasted and roasted.
Yeah. And Walt is not too bad.
Well, it's
been such a strong stock.
It has. Well, it's going to be Walmart's getting closer to getting back inside that range, and if it gets back inside that range, it's going to be big trouble for Walmart. We'll see where that.
That's got to get below 70.25.
No, it absolutely does. There's no doubt about that. Let's go to John in Sarasota. Hey, John, what's going on?
Oh, things are good down here, Tom.
Awesome, man. Thanks for calling. Thanks for holding. Appreciate it.
Okay.
What are we going to look at?
Sony, S&E.
Let's take a look at it. We get Sony. Of course, we know what Sony's the huge, large industrial company. Lows 10, the highs 22. Okay, so let's see what we got. Now, do you own this?
I own it, but I want to check it out. I think I may want to get out.
Well, what you can do is you can put a stop under 1091. It's acting fine here. I mean, it's coming into the swing low, and it came into the swing low on Monday with 3.1. Yesterday it had 3, and the swing low is 5.
Okay.
So your benchmark on this, John, is August 3rd. Volume is 5.2 million. And what you see is that you did 3.1 Monday. What you'd love to see is this. This would be just dynamite. If this, right now, folks, this is down 31 cents, and it's only done 400,000 shares. So it's not even going to come close to 3.1 today. What you'd love to see is that if this could just crawl, well, it's only down 4 cents. It wasn't down, that was 3 cents. Oh, interesting. What you'd love to see, either that or someone just bought it. What if someone just buy it? Someone just did.
And it also has that nice little high volume high on September 17th.
See, this is good you called, John. You get buyers in the stock now. Yeah, you wait right there, okay? Steve Rhodes, Tom O'Brien, we get John from Sarasota, folks. Excuse me. Dow's down 260, Nasdaq off 58. S&Ps are up 28. We're going to be right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll you'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to tfnn.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Steve Rhodes, Tom O'Brien. I appreciate you growling and prowling out here with us. Right now, we get the Dow down 284. NASDAQ off 64. S&Ps are off 30. We got gold down 10. Silver's off 84. Bonds are up 2 full points at 150.08. King Dollar's up 22 ticks at 80.93. No, it's not
even moving.
It's not. See, the key here, folks, is that when the between the bonds and the dollar, they made the initial move, you know. So what we have, we're talking about Sony. So what you'd love to see here, John, is this: is that you're at $11.10 right now. You want to close like 11.20, particularly if you're going to close like 11.20 today. It'd be pretty sweet. But you know, your benchmark out there is the 1091, and just put a stop under 1091.
Okay.
Okay, man.
Thank you very much. Appreciate the help, Tom.
Have a great one. Have a safe one. And if we go over and we'll take a look at the yen, because it's all Sony's all about the yen, folks. And you know what? The yen looks good. You know, we're at 79.91. We put this on a little bit longer basis. Yeah, I mean, the yen can, we can back off to 79.24 easy. That's no big deal. But that's building cars, you know? Building cars for higher price. And market-wise, okay, so let's go over and we take a look at Apple. Apple is no doubt taking the NASDAQ south in a big way. So Apple's going into the... So 570 is the number on Apple. Yeah, 570, and they're at 562 right now. And, you know, so we'll see whether it can basically hold any of those numbers and get back inside that range.
Yeah, if you close below that,
yeah,
you know, then you're going low. Now with volume,
yeah, totally. You have 530 in a heartbeat, man. You know,
there was a gating structure on the way up. It's not nice on the way down.
Big time, big time.
You know, just creates lots of selling pressure.
There's no doubt. There's no doubt about it. And the numbers, they're getting redder. They're getting red. If we go over to the Qs just for a second, we take a look at the 3 Qs. We are at 64.27. You're doing 16 million. Now, see, this is what has happened. Okay, so watch this. When we first came on, folks, and we've been on almost an hour right now, we were at 10 million in a half hour. And we only did 6 million in the next hour. So what that's saying, that's still saying that you have plenty of volume, you know, but what it's saying is that the volume has got cut in half right now. So we'll see.
What strength is there inside the Qs? Let's go see what.
There's probably nothing. Let's take a look at it. Yeah, I guess you do. You have Netflix. Okay. So you get. Let's see. Which W?
I don't even know what that is.
Warner Chilcott. Okay, so that Warner Chilcott is the strongest one. That's up all of 29 cents. Netflix, we know, is a dead cat bounce. That's up $1. Henry Schein, that's up 50 cents. And Starbucks. Do you know the biggest, and this is where this always gets, you know the biggest downtown mover, folks? Rheingold Resources. That's taking 10 points off the NDX. Apollo, that's a dead stock. Let's see, Perdigo. Oh, that's getting smoked. What does that do? What does this company do? Let's see. A healthcare supplier. She's coming down. Oh, look at this. Oh, my God. If you want to see something, just look at that. How does that work? What's happening here, folks, is that this is just going to test the high-volume low from last time. You have a high-volume low at 104. Stock goes all the way up to the high of 120 and blows out right down to 104. This is Steve Rhodes, Tom O'Brien. You stay right there, folks. We get our man, Mr. Basil Chapman, coming up next. Newton, Massachusetts, 11 to 12. Larry Pesavento, 12 to 1. Darryl Martin, 1 to 2. David White, 2 to 3. Ken Shreve, 3 to 4. Back here, 4 to 6. Have a great one, folks. Have a safe one.